Hello everyone, welcome back to my channel. You are watching Wealthy Brains, and now let's get in this video. Nick Barisheff is the founder, president, and CEO of BMG Group Inc., widely recognized as an international bullion expert. Barisheff has written numerous articles on bullion and current market trends, which have been published on various news and business websites. Nick is regularly sought after for broadcast media interviews and articles by leading business publications across North America, Europe, and Asia. For the past 20 years, Nick Barisheff has focused on the world of precious metals and benefits available to investors who hold physical gold, silver, and platinum bullion. As president and CEO of BMG, he uses his understanding of the precious metals markets to develop strategies, products, and services for clients looking to integrate bullion into their portfolios. His view on the precious metals sector is that gold, silver, and platinum in bullion form are a vital component of a client's financial program and should make up at least 10% or more of a well-diversified portfolio. In 2002, Nick launched BMG and BMG Bullion Fund, Canada's only RRSP-eligible open-end mutual fund trust that purchases equal dollar amounts of gold, silver, and platinum bullion. Subsequently, BMG Gold Bullion Fund and the BMG Bullion Bars program were launched as part of the company's growth initiative. The BMG Silver Bullion Fund was launched in 2016. Nick specifically designed all BMG products so they would not compromise any of the fundamental attributes of precious metals ownerships: absolute liquidity, no counterparty risk, and no reliance on management skills. In 2011, BMG became an associate member of the London Bullion Market Association, LBMA. The only other equally accredited company in Canada is the Royal Canadian Mint, the crown corporation that produces Canada's currency. Widely recognized as an international bullion expert, Nick has written numerous articles on bullion and the current market trends that are published on various news and business websites. He has appeared on BNN, CBC, CNBC, and Sun Media, and has been interviewed for many articles that have been published in leading business publications across North America, Europe, and Asia. His first book, $10,000 Gold: Why Gold's Inevitable Rise is the Investor's Safe Haven, is a must-read for investors interested in the concept of sound money who will benefit from Nick's insights into the portfolio preserving power of gold. Through BMG, Nick continues to develop products and services that allow investors of every level, from institutional to do-it-yourself individuals, to take full advantage of buying and holding uncompromised bullion in a diversified portfolio. The silver squeeze story has been making headlines for months now, but even with this increased attention, the white metal's price remains below the US $30 per ounce level. Nick Barisheff, president and CEO of the BMG Group, pointed out that people are paying closer to $50 for an ounce of silver on sites like Amazon and eBay. I think the $50 price is more realistic. It's not a theoretical ask price. People are buying coins, and so on that price. So as time goes on, it's a good area to monitor for what the real physical price is, he explained in a conversation with the Investing News Network. Barisheff said it's clear that demand for physical silver is high, and noted that aside from retail buying, more COMEX participants are requesting physical delivery of the metal. We've had massively more requests for COMEX delivery than normal, so that's an indicator that more and more people are looking for a physical, he said. There's been rumors of shortages from the Perth Mint for converting your unallocated accounts to physical. People are concerned about why there are delays and so on. So these things are all coming together. When asked why prices for silver and gold aren't higher considering the numerous positive influences at play right now, Barisheff said he believes market manipulation is to blame. I think anybody that studies the issue in any great depth will come to the conclusion that the prices have been manipulated by the paper markets, he explained. But any kind of manipulation ultimately fails and prices have to go back to their mean. In terms of what could make that happen, Barisheff suggested that pension funds entering the market could be key. Right now, only 4 of them have meaningful positions in gold, but he believes that if more of these entities are getting involved, that could break the hold of manipulative forces. There's 2 components. There is the difficulty of getting silver for the SLV and also the COMEX, said Nick Barisheff of BMG Group. Silver surged into mainstream headlines in late January as the silver squeeze narrative took hold. But what's happened to the white metal in the weeks since then? Speaking to the investing news network, Nick Barisheff, president and CEO of BMG Group, said the story is still alive and well. In his view, there are two key points silver-focused investors should be aware of. I think the thing that people should understand is there's two components. There's a difficulty of getting silver for the SLV and also the COMEX, he explained. The COMEX is a futures and options market for a variety of metals, including silver. Barisheff noted that typically 90% of futures contracts on the COMEX settle in cash and not physical delivery. But that could potentially change soon, as March is a month where delivery can be requested. The problem the COMEX has is that they have, by some estimates, 100 contracts for every ounce of silver. So if everybody stands for delivery, then we have a big problem at the COMEX, he said. Looking at the SLV, which is the iShares Silver Trust, Barisheff said the issue again is supply. To explain it, he compared gold and silver exchange traded funds. And all the ETFs, the trustees or the custodians, don't go out and buy silver as investors buy shares. They have authorized participants, which are typically the big banks and brokerage houses. They contribute a basket to the ETFs. In the case of gold, it's 400-ounce bars. In the case of silver, it's 1,000-ounce bars. That's where the difference lies, said Barisheff, who is also the author of $10,000 Gold. The thing is that central banks purportedly hold 30,000 tons of gold in various central banks. So the authorized participants typically can borrow gold from a central bank and they contribute to the ETF, but the central banks don't hold silver. And there's a limited amount of physical silver in London, so if more and more people buy shares, they could effectively run out of silver. The poor man's gold is gaining momentum. When silver has long been overshadowed by gold as an investment, the surging price of the yellow metal this year is helping to drag its cousin into the limelight again. Silver for December delivery settled last Friday at $20.82 an ounce on the New York Mercantile Exchange, the highest level in the 3 decades since the Hunt brothers of Texas tried to corner the silver market in 1979. It closed Tuesday at $20.64. Many of the same factors driving gold higher are also propelling silver. In both cases, investors are looking for havens from fears of slumping currencies and future inflation. Just as with gold, opinions are sharply divided on silver's future, with some investors trumpeting its potential for further gains, while others are busily selling down their stockpiles to take advantage of the recent high prices. It was once difficult for small buyers to invest in silver, but North American investment firms have been launching silver-related investments since the white metal bottomed at less than $10 an ounce during the global credit crisis in late of 2008. Nick Barisheff expects silver to move higher by year-end if it tracks gold in the same way it has done over the past 5 years. During that period, gold prices in the last quarter of a year have on average risen by twice the amount they have during the first 3 quarters. If this year follows that pattern, gold would hit $1,500 an ounce and silver would reach $23, he said. This is all for today, folks. If you enjoyed the video, then leave a like, and if you are new, then do not forget to subscribe. See you till the next video, and thank you for watching.